Hey, so what I've done recently is I've gone through all the FAANG stocks and I've basically given them all a preliminary projection for the year end. So here's kind of like the stock tracker, and so this kind of lets you know exactly which ones I'm picking. So I picked two for right now in April. We have Netflix and Amazon at the top. If you're unsure what these colors mean, that's what this little chart here off the right says. But the columns that I want to focus on right here is G, H, and I. These columns right here, uh, G is showing what I'm currently projecting that this stock, where this stock could be at year end. And so the two that we're going to just focus on are Netflix and Amazon. So right now, Netflix is at 327. Currently, I'm projecting them to finish off at between 436 as a low and 511 as a high. Of course, we'll see how that plays out. But if it does, even the low end would be a 33% return between just now and then, about 7 months. And then Amazon, currently it's at 106, and I'm projecting 130 to 163. And so even on the low end, that would be a 23% return between now and year end. Of course, we'll see how it all plays out, and this will get adjusted as time passes and more news comes out. But with that said, let's just look into the technicals just to kind of see just a little bit more into why I'm choosing those ranges. So for Netflix, currently it's on this uptrend. That's what these gold lines here are. And it's been that way since about June of 2022. So it's almost been a year of full uptrend. So if that uptrend can continue through the rest of the year, that kind of lands us in that range. So that was one factor in choosing that. This blue line here, that's what I deemed as the fair value point for this stock. Again, that's kind of right in the center for this one. And that's more so based off, if we go back further, that seemed to be a strong support line going back into 2020, early 21. So I think it's possible that I can get back in that range. And then this purple line here, this purple line, that's kind of like what I think will happen with this one over the next 2 quarters. This really shoot off point, I think it's probably a little exaggerated, but whenever I was making this forecast in the Netflix specific video, I really just wanted to showcase that I'm projecting a big pop between once second quarter results come out, and that's just based off the fact that right here, they just released their first quarter. Uh, it was kind of mixed in terms of revenue and subscribers and all, like kind of the key dynamics. And so for this quarter, I do kind of think it's going to chop sideways, preferably up. And so that's kind of what these squiggles are here. There really wasn't any rhyme or reason to it. It was just that's kind of what I'm hoping it'll do. It could be any sort of randomness, but I guess I'm just hoping it'll bounce up and down between that uptrend uh, in some various fashion for the next 3 months. And then once their second quarter results come out, what I'm hoping to see is their two policies kind of come into place. That first one being this password protection program, where it's basically meant to stop many users from using the same account, such as if I had an account and I was sharing it with 5 friends all across the world. Well, because those friends are so far away and not close to my central location of the account, those 4 other friends, they cannot use my account because they're too far away from the Wi-Fi. And if you watch the video, I go into more depth about it, but basically what's the result should be is a lot of people should be out of an account, of a free account that they were using from a friend or borrowing from a friend or something like that. And then the second piece is that Netflix is then offering a low costing ad tiered subscription. And so the thinking is all these people are going to be removed from using their friend's free service, and they'll transition into this ad tiered base because clearly they didn't want to pay for Netflix, but hopefully Netflix has provided them enough entertainment that they do want to continue the service, even by paying something like $6 or $7 a month. So that should give them a boost in revenue there. But then if they do actually continue with that ad based uh, tier, the double up there is they're now going to make, I would project, billions of dollars in ad revenue. And so I'm hoping that'll get broken out on their income statement at some point once it actually becomes relevant. Right now it's not there, but I think I would hope by the end of the year it is broken out. And so that's kind of the thesis of why I think that will shoot up. Um, the one piece that I left out is it's meant to be these terms in terms of password and this ad tier. The ad tier is already available in America, but this password protection piece, that's meant to be rolled out in America this quarter. So I think a lot of people thought it was going to happen, say, last quarter, either fourth quarter of 2022 or first quarter of 2023. But whenever they were rolling it out to a couple other countries, it just wasn't as it just wasn't up to what they were hoping it would be. And so they took some time, ironed out some details. They have it in a better spot, and now it's going to get pushed into America, and that's a huge market for them. So I think we'll really see an impact, and that'll really just kind of show what this company will do going through the second half of the year. And so currently I'm projecting a very big uptick in this company come the second half of the year. But we'll see. We'll see how it goes. But that gives you some background of why I chose that point. For Amazon, Amazon, not too much with this one. Again, the reason why I chose this range is, again, it's near this fair value point that we marked out probably a few months ago. Um, I, I just, I feel like if this one can get solid ground above this buy point here, this green bar down here, right, kind of where it's at right now, right here around like 10, it's at 106, but the green bar's at 103. I think once it can actually stay above that line, there's not much like support or resistance between about 103 and 130. I mean, we see a little bit of choppiness here, a little bit here, but I mean, that's like, this is 1 month's time. This is maybe 2 months' time. If we go back, it was just a rocket that shot through about $50 worth of stock value. So I, at this point, I'm leaning towards the optimistic route. In terms of news, I all I can think of is Amazon's made some layoffs, which would remove some of their excess expenses, and they're moving into artificial intelligence, which uh, also should help cut out some, I guess, unwanted expenses or unneeded expenses once AI becomes more sophisticated. Uh, a lot to do with AWS, but also in terms of like uh, shipping out products. They might not need a person to do that anymore if they can get some sort of robot type machinery in place that can just do it quicker, more efficiently. And of course, they won't have to pay someone an hourly wage. They'll just pay one flat fee and maybe some maintenance that long term should decrease expenses. But that's still probably way down the line, probably another year. But that kind of gives you an idea of how I chose this range. It's more so, I think, once this stock, and what we have here is we have two scenarios that I drew out during the Amazon specific video. We had this yellow line, which was at in the moment that was meant to be my conservative type uh, projection for this over the next until about June. I thought it might hit resistance at 103. That's still yet to be determined. I know it's currently at 106, which is above that buy point. But I mean, I've seen it with many stocks where it does stick its head above there. The very next week, it pulls right back. And so that is just one scenario I saw where it might just kind of continue bouncing between about $91 and $103. That's the yellow conservative line. And then the purple line is what currently looks like it might be happening. is that it will just continue trending upward, getting higher highs and then higher lows, and then it'll just kind of chop sideways until we get hopefully in this projected range, with the knowledge that there's not much like resistance between, I would say, 143 and maybe 114. I think once it gets to 114, it could easily jump up to like a 140. And so that's kind of why I put it in such a high spot. And I think this also doubles with the fact that it's currently at what we originally picked as a buy point. A lot of these other stocks, if we go back to them, um, I don't actually show the buy point, but like I know Meta, I'm not sure what the buy point I had for them, but it's above that buy point. Meta's probably more in the fair value point range, and so that's why it doesn't have that much potential growth in my opinion. Same with Apple, Microsoft is the same way. Google, I'm a little surprised about. You can see there's still a high end potential growth of in the 20s, but low end, it's clearly in a spot where it may just trade sideways for multiple months. But of course, we'll see how things play out. I did mark that their financial statements are coming out soon for the, I believe, the first quarter. So we'll see how that plays out. But um, that's just my thoughts for now. And I'll keep this on the screen just so you can see kind of like the rankings. This is currently ranked by uh, the low end projection, what type of growth we could potentially see between now and year end. So if you have any differing opinions, do you think they should be ranked differently? Do you think these buy points or potential end of year values are just off in your opinion? I'd love to hear your kind of thesis behind why you value it at this or that, um, and of course, if you have any questions too, I'd be happy to answer that. But with that said, please like, subscribe, and I'll see you on the next one. Bye.